Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, as we all know, that market has become very volatile, very unpredictable for the last couple of days because of the ongoing banking crisis in the whole world. So as a result, things are very unpredictable right now, and the market is mostly waiting for the next FOMC. This FOMC will be very critical, and market will probably give a very big move. But it is very early to predict in which direction the market will move. After all, this is the market. Okay, market is full of surprises, and after all, okay, we need to be careful as well. As I always say, my dear friends, if you're a new trader, beginner, then you must be very careful. You should be closing down all your positions, US dollar positions, before FOMC, because market may show unexpected moves. Okay, market may show unexpected spikes, so be very careful. So before FOMC, as you can see that right now DXY, after breaking the support of 103.50, is showing some recovery, but right now it is still very early to predict that DXY has gone for trend reversal. No, we do not have any trend reversal confirmation sign yet. So we will only get to know about the next move or the direction of the market after FOMC. So till FOMC, okay, you need to be very careful. You need to trade from level to level only. Swing traders, positional traders, this is not the ideal market right now. Okay, this market is mostly for day trading, especially for quick entry and exits. So if you look at a chart of DXY, then DXY is right now standing at 103.49. If DXY continues the recovery, then DXY will face some resistance around 103.70, and there's a possibility that DXY will reverse. If DXY reverses, okay, then we may assume that DXY is continuing the selling pressure or the downtrend again. Till FOMC, this is the present scenario on DXY. And if you look at the chart of Euro USD, then as expected, Euro USD is trading inside the channel. We got two moves, okay, that we expected, and we made some money also. And right now we can see the market is heading for some correction, but the problem is that though market is still trading inside the channel, but market has already tested the trend line or the line at the bottom many times. So market will be testing the trend line for the fifth time, and probably you all know it very well that if you find market testing a level too many times, the level loses its strength. So market will be testing the trend line for the fifth time. So this time market may break down the trend line. So you need to be very careful, though the market is showing some upward move. So once market hits the trend line, instead of pressing the buy button immediately, observe the volatility of the market. If possible, get the additional confirmation from DXY. So instead of trend line, I think we have a better support around 1.0680. Around 1.0680 we have a better support, because apart from the trend line, okay, we also have the Fibonacci 0.236 around this area. So this is a support zone for us. If market comes to this level, okay, observe the market. If market bounces, you can go for a buy. In case market shows extreme volatility, if DXY shows massive green candles, then obviously you will see selling pressure on the chart of euro dollar, and in that case your support will be 1.0650, because this level 1.0650 is a better support in comparison to this, because around 1.0650 we have previous price rejection around this area, plus we have Fibonacci 38.2% retracement level, as well as we also have moving average as dynamic support around this area. So two support levels on the chart of Euro USD are support levels on the chart of Euro USD. The first support, yes, we have first support around 1.0680, and the second support is 1.0650. These two are the support levels on the chart of Euro USD. 1.0650 is much more reliable in comparison to 1.0680. As already mentioned, though the market is trading inside the channel, though we have a support around the trend line, but market has already tested the trend line 4 times, so we need to be careful this time. High chance of market breaking the trend line this time, okay? And the resistance, yes, let's talk about resistance right now. 1.0760, 1.0760, around 1.0760, we can expect the market to face some resistance. The reason is this was the high made by the market before this massive fall, so definitely we can expect that sellers will be present around this area. If market hits the level and reverses, we can go for a sell position. So these are the levels that we may consider for trading right now before FOMC. After FOMC, nobody can predict what will happen to the market, nor can I. We are traders, okay, so not gamblers. So be careful, follow proper risk management. As always say, capital protection should be your first priority always. Bye bye, take care.